Thanks everyone for being here. If you could, in the chat, type in the county that you're calling in from and the organization or the business that you represent. That will be really wonderful for us to see who all is here. So today's session is going to be an overview of the Community Food Access Equipment Tax Credit Program. So what we're going to be doing today is going through the information on the website, the eligibility maps, and the application. So you are very welcome to follow along as we go. Here's the URL for our website. Feel free to follow along, read along as we go through this session. I also want to point out that if you are more comfortable in a language other than English, you can select your preferred language from this drop-down menu at the top. We'll get started. My name is Mickey Davis. I am the program manager, and I'm also joined here by my colleagues Adonai Cuevas and Michelle Meyer. They're going to help me with this presentation. Our contact information is listed here on the website. We are always available for questions, comments, concerns. But I also want to point out to you that there's a cool little button here you can click, or up here, get help in your area. This page has the contact information for dozens of trained contractors who know this program inside and out, and they live all over the state, and they can help you apply for a tax credit. So I strongly encourage you to take a look at this page, reach out to the folks listed who are in your region. You can see the counties that they serve listed here in each box, and you may even see some of them on this call. So with that, we will get started. We are going to move through these materials and save some time for questions at the end. If you do have a question, feel free to write it in the chat. And anything that we haven't covered at the end of the session, we will touch on. Okay, so here we go. We're going to start here with a quick overview of what the process is for receiving an equipment tax credit. So we're starting here on this tax credit program page. After we go through things at a high level, we'll get down into the weeds on this frequently asked questions page. So starting out with the program's purpose. So this program was established in legislation, and the purpose of the program is to increase access to and lower prices for healthy foods in low-income, low-access areas of the state by supporting small food retailers and the farmers that supply those retailers. So we're going to be saying the term low-income, low-access quite a lot in this session, so we like to abbreviate that to LILA. So if you hear the word LILA, that's what we're talking about. So step one, who is eligible for this tax credit? If you are a small food retailer or a small family farm, you are eligible. Unfortunately, no other business is eligible for this tax credit program. Step two, find out if your purchase is eligible. So is what you bought, is the equipment that you purchased eligible for a tax credit? A couple things to note here. This tax credit is only for equipment. We'll talk a lot about what sorts of things aren't considered equipment or aren't eligible. Another big thing to note is that at the time you apply, you need to have already purchased your equipment. So that's something to note as you think about the process. So you need to buy your equipment first, put it into use, demonstrate that there is an impact from your equipment towards advancing the goals of this program. And then you can apply. So we'll be talking more about what equipment means and where these LELA areas are shortly. Okay, then you would apply for the tax credit. There are 3 tax credit application deadlines throughout the year. The next one is December 31st at midnight. So this tax credit program is set to go through the end of 2030. So every year, this process should be the same. We do post all these deadlines on our website here, but you have many opportunities to apply throughout the year. Okay, so once all those applications come in, the next step is the Department of Agriculture will put all these applications in order, make sure they check all of the appropriate boxes, and issue the credits. So a few things to note here. We are putting these applications in order. And generally, if you have not yet received a community food access tax credit, you will be in a higher, your application will be read first. If you haven't received a tax credit this year, but you've received it in past years, you'll be like in the second grouping there, and then everyone else is below. Within each of those groups, the applications are sorted in order of priority of the type of equipment that you bought. So we'll talk about what equipment is the highest priority and is reviewed first, and all the other types in order. So stay tuned for that. Another thing I wanted to note about this review step is if the review committee is reading your application and seeing that something is missing or needs clarification on something, the team will reach out to you and you will have 7 business days to complete your application or clarify what needs to be clarified. So there is a chance, even if you don't submit a complete application, to correct that. And then step 5, you'll receive your certificate. So your certificate is essentially a piece of paper that says this business is owed this much money in credits against their Colorado state taxes. So how do we calculate that amount? It is 75% of the purchase price of your equipment. So in 2024, the percentage is 85%, but in 2025, it's 75%, and every year going forward, it will be 75%. We will also ask you to sign an attestation that says you understand the purpose of the program and the way your equipment is intended to be used. So then you'll move on to the last step, which is filing your taxes. So you'll take that certificate that you were given by the Department of Agriculture, and you'll include that when you file your taxes for that year. So a couple things to note there. The Department of Agriculture will communicate that amount that is owed to your business to the Department of Revenue. And that credit amount will be deducted from the taxes that your business owes to the state of Colorado. And if the amount of your credit exceeds the amount you owe in taxes, you will get the remainder back in the form of a check. So to illustrate that, if you own a grocery store and you purchase a walk-in cooler that costs $100,000, You would receive a tax credit that's 75% of the purchase price, so $75,000. And if you owe $5,000 in taxes to the state of Colorado, that would be, your credit would be subtracted from that, and then the remainder would come back to you in a check. So you would get a check for $70,000. So a couple things I want to note here. Steps 1 through 5, you will be working with the Colorado Department of Agriculture. That's the folks on this call. For step 6, you're working with the Colorado Department of Revenue. So a few things to say about that. These are state taxes, so you're working with Colorado Department of Revenue, not the IRS, not federal taxes. And CDA is not able to answer questions related to filing your taxes. We're not able to give tax advice. So we highly encourage you to work with a CPA or a tax expert to get those questions answered. And any questions you have to direct to the Colorado Department of Revenue. So that's our high-level process there. There's a couple more things I want to mention. When you purchase equipment, you have until the end of the following calendar year to submit an application and apply for a tax credit for that piece of equipment. So that means if you purchase equipment in 2024, the very last day that you are able to apply for a tax credit for that equipment is December 31st, 2025. And so on and so forth. So you can see this 2024 application is still open, and the 2025 application will still be open through 2026. I do want to note that it is the business's responsibility to ensure that the tax credit is applied to the appropriate tax year. So the certificate is good for the year that you purchased that equipment. So if you receive a tax credit, but you've already filed your 2024 taxes, it will be up to you to go take the appropriate steps to ensure that that credit is actually received from your 2024 taxes. Okay. The Department of Agriculture is allowed to issue up to $10 million in credits per year. So beyond that, we are not able to issue credits even if everything's eligible and a perfect application is submitted. However, we will always post the amount in credits that has been issued so far. So you can see for the 2024 calendar year, we've issued just over 1 million of the 10 million available. And for 2025, we've issued 230,000 of the 10 million available. So there's plenty of funds available for this tax credit program. The last thing I wanted to mention is once your business receives a tax credit, we will welcome you into the Community Food Consortium. So this consortium is a group of similar businesses that are working to expand access to healthy food in their LELA areas. There's a lot of cool benefits. Groceries more accessible and healthy throughout the state. So that's one more piece of this tax credit program. Okay, so we've covered this page at a high level. Now we are going to get into the weeds and talk about the details here. So you can see toggled over to the frequently asked questions page. So you can see some high-level questions and a lot of drop-down menus. So we're going to go into these a little bit. Okay. So again, who is this program for? This program is really focused on supporting retailers. So if you own a grocery store, a carniceria, a general store, a mercantile, in a low-income, low-access area, this program is for you. Farmers markets and farm stands also count as retailers, and the definitions of each are here. For the application, businesses will need to submit documentation to prove that they meet every component of these definitions. So for small food retailers, they'll have to prove that they are Colorado business, Colorado owned and operated. They have less than 10,000 square feet of retail space. They carry the required amount of staple food items, and they're located in a LELA area. And farmers markets or farm direct operations need to demonstrate that they are SNAP or WIC authorized, or they have applied to be. So small farmers are also eligible for this program, as we've mentioned, so long as they supply foods to a small food retailer. So if you are a farmer who mostly sells your products to restaurants or schools or food pantries or at a farmer's market that's not in a low-income, low-access area, this is probably not the program for you. However, if you are a farm that mostly sells your products to a small food retailer, like the ones we just described, or at a farmer's market that's in a low-income, low-access area, this could be a great fit for you. So another way that farmers are able to access this program is if they have a farm stand on their farm or somewhere else that is in a low-income, low-access area. I do want to stress that if that's the way you're demonstrating that you're eligible, you're going to want to fill out the application for small food retailers, farm direct operations, not the application for small family farms. So we'll talk about that more when we look at the application together. Okay, another quick note here. We talk about staple foods and healthy foods. So I wanted to note the difference here. Staple foods are the kinds of foods that you need to prove that you carry if you are claiming to be a small food retailer that meets this first definition. But healthy foods are the kinds of foods that this program intends to expand access to. So healthy foods is actually a pretty broad definition. It's fresh produce, it's frozen meats, and anything in between. What healthy foods does not include are sugar-sweetened beverages, candy, alcoholic beverages, tobacco, non-food products, and then really importantly, food that's hot and ready to eat. That's not the kind of food that's within the scope of this program, which is to expand access to groceries, not hot and ready to eat foods. Okay. Next, let's get into where these low income, low access areas are. So you can see a few links here. Tribal areas count as low income, low access areas. You can click on this link to see those. Also, the USDA defined low income, low access areas and a separate group did studies mapping where limited supermarket areas are. So those both count as qualifying areas. So if you click on this link right here, it will take you to this map. And I'm gonna show you what this map looks like when you first click on it. So this is the map and it's zoomed into Colorado. And you can see these purple areas and these yellow areas. So this is a little misleading when you immediately click on this map, because our program is borrowing this map from a different national program called the Healthy Food Financing Initiative that does work in similar areas and has a similar goal. But our eligibility criteria is just slightly different from theirs. So in order to see those USDA low income, low access areas and the limited supermarket areas, you are going to want to go up here to new map. And from there, you'll click on this caret here for Healthy Food Financing Initiative eligibility. You'll click on this supporting information caret. And then you can see this map layer, which shows the USDA low income, low access areas. So these purple areas are LILA areas. And here, limited supermarket access areas, those count as eligible areas for our program. So these dark purple zones. So you will probably want to spend a bit of time on this map. You can plug in your address to see where it falls on these various map layers here. And then let's say your store is located in one of these yellow areas. Should you still apply? Well, there is an opportunity to still build a case for the fact that your community should be considered low income, low access by a different definition. And there's room on the application to talk about the low income, low access nature of your community. So many folks have brought up many different ways to build this case, but essentially the review committee is going to be assessing, how easy is it for someone living on a low income to buy groceries? So you may want to bring up some data that maybe this map does not include. For example, the recent closure of a major grocery chain, which has left your community with fewer options, for example. SNAP sales to folks shopping with SNAP is always going to be a really strong indicator of how much your retail business is reaching a low income population. So that is rather broad, but for farmers, I also want to mention the review committee is less concerned with where your farm is located and more concerned with where your farm products are sold, right? So the way to demonstrate this will be by providing a letter of support from the retailers you sell your products to. And there will be a lot of weight put on that letter of support, which should speak to the low income, low access nature of their community and how your products are meeting a need in that community. Okay, a couple of other business eligibility frequently asked questions. What if my organization doesn't pay taxes because we're a nonprofit? So unfortunately, non-tax-paying entities aren't eligible for a tax credit unless you meet this first definition of small food retailer. So if you are a nonprofit, grocery store, carniceria, it is likely you're eligible for this program. But if you are a nonprofit farm or farmers market, unfortunately, you're not eligible for this program. Okay, what if my business primarily makes prepared food? Again, hot and ready to eat foods are not eligible they're not considered within the scope of this program. So if your business is a restaurant or a food truck, it's likely not eligible. However, we have seen applications from eligible businesses who are using, say, an oven to make grocery products like bread. So that sort of thing could be considered eligible. Okay, I'm a farmer who sells at a farmer's market. Which application should I fill out? Please fill out the application that's for small family farms and be sure to submit a letter of support from your farmers market organization, and they should be able to talk about the role your farm plays in the market environment, and also speak to the percentage of your sales that go to folks paying with SNAP or other healthy food assistance program bucks. Okay. Costly equipment, what does that mean? So you may recall, there is a prioritization of the types of equipment for this program and the order in which it will be reviewed. So at the top, we've got cold storage, so anything refrigeration, freezing, whether it's in your store or in storage, that's the highest priority. And then you can read all of these eligible pieces of equipment, but point of sale machines, display shelving, power generators. We've seen some of those requested in areas that lose power frequently. Refrigerated or commercial delivery vehicles are eligible. Standard vehicles are not eligible. I'll just note there. Other equipment not listed here could be considered. And then farm equipment is this last bullet point here. So if you bought something or you are thinking of buying something and it's not expressly listed here, you have a few options. You can email me, Adonai, Michelle. You can email or call your outreach and technical assistance provider in your area. Or if you would like to fill out a formal request for a letter of eligibility for your equipment, you are welcome to do that. And we have a link here for that. Okay, things that are not considered eligible equipment. Supplies. So items with a useful life that's not longer than a year and that don't represent a substantial cost are not eligible. So if it's packaging, if it's inventory, if it's a consumable, that's not going to be eligible. Standard vehicles, as I mentioned, point of sale systems that aren't compatible with healthy food incentive programs are not eligible. And then people power is not eligible. So labor costs, installation costs, payroll expenses, those are not eligible. And then finally, anything that's not being used towards the goals of the program, which are expanding access to healthy food for folks living on a low income. So if your equipment's primarily used to sell alcohol, it's not going to be eligible. So yeah, feel free to review this and ask questions. Now, a really important part of the application is to demonstrate that the equipment you purchased met the goals of the program. So again, our program goals here are to make it easier for someone shopping with a low income to buy healthy foods, right? So there's a lot of ways you can demonstrate that your equipment purchase has had an impact. We have some ideas here listed. So maybe you want to talk about increased sales of healthy food to Leela communities or increased sales to folks shopping with SNAP or WIC. Maybe your farm stand was able to increase your hours of operation because of an equipment purchase. Maybe there's more opportunities for folks living in your Leela community to purchase healthy foods, or you've been able to lower your prices of healthy foods. So a big note here, when you talk about your impact, it's very important to talk about it in the past tense. That's what we're going to be looking for in order to be able to say this equipment has a demonstrated impact. So even if you've had a small impact, please speak about that in the past tense, and then you're welcome to talk about the larger impact you expect to have in the future. But applications that don't have anything in the past tense, just future tense conversation about the impact of your equipment purchase can't be considered eligible. Okay. Again, we'll be looking for information about how your equipment has been used and how you plan to use it. So again, eligible activities for retailers include selling healthy food to a Leela community. For farmers, it's similar. It's selling your foods to a retailer in a Leela community. So sales to restaurants, sales to schools, sales to food pantries don't count as eligible activities for the use of that equipment. So we are going to be asking you if your equipment was primarily used for eligible activities versus other activities, other sales outlets. Okay. A big part of your application is gathering all of your documentation. So there's two kinds of documentations here. One, you need to prove that your business is eligible, and two, you need to prove that you purchased your equipment. So as we mentioned before, for small food retailers, you'll need to prove that your business hits all of that criteria that's in the definition to be eligible. And same with small family farms. And we've talked a lot about how small family farms will be required to submit a letter of support from those retailers that they sell to, whether that's the store owner or the farmers market organization. So letters should be signed and dated, and they should also address all of these bullet points. So it's very important that when you go to the retailer asking for a letter of support, you provide them with enough information so that they can, have a complete letter of support drafted for you to include in your application. Okay, I am going to pass it over to Michelle to talk about proof of purchase and proof of payment.
Thanks, Mickey. Thanks everyone for being here. We thought we'd have a few different people talk just to keep you so engaged. I know who's not super excited about proof of purchase and proof of payment. But I will just start by framing this that I know sometimes that term might be a little confusing. So just to provide a little bit of clarity around what we mean by that. And really, this is just your opportunity to submit receipts and invoices and all the things we'll talk about in a second to show CDA that you actually did buy the piece of equipment. We owe that to the taxpayers that are going to be ultimately, right, helping fund this credit, all of us included. So it's basically part of the due diligence, if you will. So with that being said, proof of purchase is really just what that term says. It's showing that you actually bought that piece of equipment, right? Whether it's the walk-in cooler that Mickey mentioned or the generator. It's your opportunity to prove to the state that you actually bought that equipment. So what would that look like? It could be an invoice, it could be a receipt, it could be an order confirmation. What it should not be is a sales quote or an estimate, right? So we need something ideally that says the word invoice on it or some kind of receipt from whoever you purchased that from. And it needs to include the details of what you purchased. What we have a hard time accepting is an invoice that just says, $5,000 for equipment. We need to know what that equipment was. We don't necessarily need to know the serial number. And if it's on there, that's fine. But we need to have a little bit of a description of what that equipment was and is, so that we can obviously match that up. Some things that trip people up, and this sounds obvious, but as you maybe scan those documents in or take pictures of them, they need to be legible. We need to be able to read them. If they're sideways, see if you can rotate them or take another picture so that they're upright so that we're not reviewing things with our neck sideways, which happens. And then if you have other items on a receipt or an invoice, if you can circle or highlight what you actually are submitting for the tax credit for, that's super helpful. It just reduces how much time our group is spending kind of going through the details of those types of things. So that's the purchase side of things. And then there's a proof of payment. So that just shows that you actually paid for this piece of equipment. Typically, that's either going to be a credit card statement or a bank statement. One of the biggest issues to note here is we cannot issue a tax credit for anything that was purchased with cash. So make sure you are using some sort of form of payment that we can get documentation for. So again, no cash purchases are eligible for the tax credit, unfortunately. If you're submitting a credit card statement or a bank statement, you feel free, and actually we would encourage you to just black out, take a highlighter, or excuse me, not a highlighter, take a dark Sharpie, don't highlight it, and black out all of that other information. We don't need all of your full personal information. What we do need on there is the bank name, your business name, and then the date and the amount and the detail for that transaction. A lot of times people might submit a snippet, so something from on their phone that just shows that transaction. A lot of times that's not acceptable, and we end up having to go back and forth because it doesn't have all the other details. So in a perfect world, we would get just that page of your bank statement that had the name, the address, all of that kind of top page information, and then that transaction that is connected to the equipment circled or highlighted and everything else blacked out. Same thing for the bank statement, whether it's bank or credit card. If it's just a check that you paid for, the front and back of the cleared check, so not the check when you wrote it, but actually after it cleared your bank, is also an acceptable form of proof of payment. I think the biggest thing on this is, again, the more time you can take to make sure it's legible, it's readable, and it's very clear. It just makes the review process that much easier on the back end so that we can get you your credit and you can get your wonderful tax credit for the equipment. And again, just as a reminder, we're monitoring the chat and we'll answer the questions when we're done. But thanks so much, Mickey, and we'll take questions at the end.
Thanks, Michelle. Yeah, another thing I'll note here is this is the most common area where we need to go back and ask for more information. So you can save time by really carefully reading everything that's required for proof of purchase and proof of payment and making sure that that information is on what you're submitting. Okay, so we have talked about these other resources as well. I'm going to hand this over to Adonai. But before I do, I'm gonna leave some parting words with you before we leave this website. Advice: read every word of the website and the application before pressing submit. It can really help save time and keep you on track and help you focus the responses that you're providing in the application. Reach out for help if you need it. We are here. We've got technical assistance providers here too. And then finally, connect with a CPA or a tax expert to help you with the tax filing side of things. We unfortunately can't be of any use there. And there's a lot of individual situations that you're going to want to navigate with someone who is an expert. So those are my parting words, and I will hand this off to Adonai.
Thanks, Mickey. All right, so I'm going to share my screen. Oh gosh, I cannot see it. Okay. Oh, give me 1 second. Okay, here it is. Okay, can you see the access.gov website? Perfect. Thanks, Mickey. So yeah, this will be the application website. You can find it on the CDA's website as well. And the first thing is after you have read very carefully our website and you know all the ins and outs and all the documents that you're going to need to fill out this form, you can create a login, which is something that we recommend doing. You can do it without creating a login, but you won't have the opportunity to go back and make any changes or edit anything else. So yeah, we encourage you to make that login. So I already have one. I'll log into the application. And I have saved it in here, which is great. I can just continue or delete. Maybe if I don't want to do it anymore, I can see if it's in progress, if it's done. So I'll just go back to keep working on this one that I was working earlier today. And you'll see this first page. This is the introduction, and these are all the sections that the application has. The first part, very straightforward. A little overview of the program and the questions and websites. And also the general questions for eligibility. And these has to be answered, and they can be disqualifying. Like if your business is not owned and operated in Colorado, then you will not be qualified for this tax credit. So yeah, pretty straightforward there. The second part will be just the general information of the business and yourself. It's important to be sure that you are using the legal business name exactly as you appear in the Secretary of State database. This is how the Department of Agriculture and the Department of Revenue are going to have your file. So yeah, that's very important. Same thing as the business number or the EIN, the Social Security, the ITIN, the right number. So yeah, this is like probably the most important step here. And yeah, just the general information for numbers. And another very important part of this would be what type of business are you applying as? Because it's going to change the requirements of eligibility depending on what type of business you are applying. So right now I'm just going to apply as a small food retailer. And yeah, just keep doing the application, submitting the documents, and asking all the questions. You will see this sign when the questions are required, and you cannot keep going until you answer that question. We have talked about the qualifying areas as well. And yeah, you can save and exit if you need to at this point or before, and you can always come back if you have created a login. All right, so now for the third section, it's the equipment purchase. So this is like a bit confusing, but yeah, we'll go over it as well. It's important to describe in here to choose exactly what type of equipment you are applying for. because it's gonna have different questions based on the equipment you are purchasing. This one, other equipment, it's gonna have some different questions than the rest of them for sure. But yeah, just pay attention to that. And yeah, answer the questions in there. I'm not gonna go very into detail of the questions, but yeah, make a login in here and explore the application. I think it's the best advice. And in here is gonna have you have the opportunity to upload or your documentation, proof of payment, proof of purchase. And also we are gonna have to do a little bit of math in here. So this is the thing that might have a little bit of confusion. So in here, it's gonna be 100% of the ask of the eligible equipment. If I bought something that was $200, that's what I'm asking the 75% on top of $200. Do not do the math. Do not do the 75% of $200. Just the full asking that we are gonna take that full amount for the 75% tax credit. And the total equipment cost. So if I'm not adding any other equipment, this will be 200 as well. But if you are adding some more equipment, you're gonna have the choice to submit another request in here for another type of equipment. And if you need some more, yeah, you can always add another request, or as many as you are requesting in there, and just adding all that up at the end. So we'll have the final number to take off the 75%. And the next section is just the final section for, oh yeah, sorry. I think I need to delete these ones. But yeah, the last section is just acknowledgements, and that's about it. Yeah, it's very straightforward.
Thank you, Adonai. Yeah, so we really encourage you to take a look at that application, become familiar with it. Also, Adonai, do you mind hovering over that little I next to the star on one of those questions? Just see that last equipment cost. If you scroll down.
Oh yeah.
Yes. That's another place where the application can share a little bit more about what we're looking for with the response. So if you see that little I, hover over it, and that can share a little bit more information about what we're asking for with each question. So thank you, Adonai. Thank you, Michelle. And we've got 9 minutes left to take some questions. I think we have a few in the chat.
Yeah, do you want me to read through these, Mickey? Is that helpful for you?
Okay. Thank you. Yeah, that'd be great.
Yeah, so you're not looking at 6 things. The first question from Angela, does repairing already owned equipment count for the tax credit, as in buying an expensive part to fix a freezer, for example?
Yes, that is eligible. So a good way to think about it is if it's a thing, if it's a big expensive thing, or even if it's sort of a small expensive thing, that's eligible. Unfortunately, the labor and the installation part of that repair is not eligible, but a part can be considered eligible equipment. Another note on that, sometimes folks repairing items find it difficult to talk about how that equipment expanded access. You're going to want to talk about if you had any loss in sales due to a freezer being broken. That's a really helpful metric to show that, like, okay, we lost sales. That impacted our community in that they did not have access to the items in this freezer, so that's sort of the way you want to think about it. It's a little counterintuitive, but that's how you'd want to talk about it in the application.
Great. Thank you. Next question is a pretty easy one. Are nonprofit farmers markets eligible?
They are not. So because they don't meet the definition of, they're not meeting that first retailer definition. That's the only type of retailer or type of business that can be a nonprofit and receive a tax credit. So farmers markets are not eligible. Nonprofit farmers markets are not eligible.
Correct. For-profit farmers markets would be a
Yes.
nonprofit, correct, because they have the tax liability, just to be
Yes.
super, super clear on that. Next question from Chuck. My equipment was purchased in 2024. Do I fill out the 24 application and include both 24 and 25 bank statements to show payments towards the equipment that was purchased?
Yes.
Great.
Yeah.
Pretty straightforward. Angela asked if there were tax experts that you could recommend in different regions of the state.
We do not have tax experts that we recommend, unfortunately. Adonai, Michelle, any comments on this?
I would encourage you to reach out to the outreach and TA folks in your region. They might be able to have additional resources. As Mickey mentioned, the Department of Ag we cannot give any tax advice, and we're, hesitant to recommend that you go talk to a specific individual, just to not have any bias, and not really have any liability back to CDA on how you do your taxes. So personally, I don't love that answer, but that's where we're at. Yeah. Very easy question here from Regine. Can we save a copy of the application?
Yes, you can, only if you create a login in access.gov. So as Adonai showed, you can fill out the application without creating a login, but you won't have the opportunity to go back to it and see your progress. So if you want to work on the application over a few sessions, be sure to create a login, remember your password, and you can come back to it later.
Great, thank you. This one's a little bit longer. From Susan, my farm truck, which I use for deliveries to Leela areas, needs a new engine. I have confirmed that only parts, not labor, are eligible, but I also need a point of sale system for SNAP and bonus program. Can I apply for both those two pieces of equipment at the same time, or do they need separate applications?
So Susan, if you bought them in the same year, you can apply in the same application. So as Adonai showed, you can fill out all of your business information about the Leela nature of, the retailers you sell to. And then on that equipment page, you'll see a chance to select what kind of equipment you're applying for, upload the proof of purchase, the proof of payment, and then you can click a little plus sign that says add another piece of equipment. So if you purchase both in the same year, they can both be on the same application.
Awesome. Question from Matt, other equipment, does that include freeze dryers?
Yes, we've seen freeze dryers come through. Yeah, that counts.
Great. This is a good question from Sarah. Does the item need to be paid in full?
Great question. No, you can apply for equipment that you are still paying off. We will need to see your financing agreement, and we'll need to see any payments that you've made in accordance with that agreement. But no, you can get a tax credit on 75% of the purchase price, even if you haven't paid off that full amount yet.
Great. The last couple things were someone was looking for a link to the application, so let us know. It's under step 3 on the website. If you don't see that, please let us know.
Here,
and then,
can you guys see my screen?
Yes, thanks, Mickey.
So there's step 3, and there's the buttons to apply. We've got the application translated into Spanish. If you are applying for equipment purchased in 2024, you're going to want to scroll down to this section on 2024, and you'll see the link to the 2024 application, and then the same application in Spanish.
And then Ben was asking if you could, and Adam, I did it, but where is the URL for the maps? If you want to go over that again, that'd be great.
Great questions, guys. So Go to that frequently asked questions page, and then you'll see this drop down for the Leela communities. And then the link is helpful, but also make sure you do those steps of filtering to see the map layer that actually shows USDA low income, low access tracts or limited supermarket access areas.
That
Okay.
is all the questions that are in the chat.
All
for now.
right. Well, thank you. Those were great questions. It's really exciting to see your interest. We will post this webinar on this web page here, the tax credit program page, so you guys can watch the recording. We also hope to do this with a lot more frequency. So we'll host this again in the future for those of you who want to make it next time. Yeah, thank you so much. Again, please reach out with any questions. Our information is here. And again, thank you again for all your interest in this program. We'll talk to you later.